Hi everyone, welcome back to the Clara CFO Group channel. As I mentioned in our last video, we are entering Q4 as the time of this recording when I'm recording this video, and this is budgeting season. So we've got a couple videos over the course of the next couple weeks that are going to be talking about budgeting. This video is going to talk a lot about how you create a budget, and we're going to do this one in Excel, and then we're going to take some of those concepts and then roll them into QuickBooks Online so we can create a budget in QuickBooks Online. And then if you guys want, I can also show you how to create a budget in Jirav, which is the budgeting software that we use here at Clara CFO Group. That's Jirav. Starting to dabble in showing some videos on that as well. But this video is going to be talking about budgeting in Excel, and so this is applicable to anybody. It's very much the same if you're going to do it in Google Sheets. All of this, it's basically a spreadsheet concept. So I am going to be talking about how to create that today, and if you have any questions, please put them in the comment section below. Specifically about budgeting would be great because we are going to be talking about this for the next couple weeks, and I can hopefully answer your questions and maybe create some extra videos if we see some comments that need a video to respond. So if that sounds good, stay tuned. If you aren't already subscribed to the channel, I would love to have you here. It is, we're making videos to help you with your small business finances, and that's what this whole channel is for. We've also started a sister channel, which is the Financial Clarity Podcast, which is a podcast. You can find it on all your podcast apps, but you can also go over to the YouTube channel at Financial Clarity Podcast, and there's a second YouTube channel as well, which is the same content on different platforms. If that sounds interesting, definitely check that out, but if not, no worries. We are going to get into how to budget in Excel. Okay, so here we are in the sample company of QuickBooks Online, and the first thing I want to do is show you how to pull the information that we're going to start with into Excel before we start the budgeting process. So what we need is a profit and loss by month. So I want you to go to your report section here, and then you're going to click on P&L, profit and loss. It might not be highlighted for you. If you can't find it, just type in the search bar profit and you'll be able to find it. And then what you want to do, and this is regardless of if you're using QuickBooks Online or you're using a different accounting software, you're going to want to find this report. And any accounting software should be able to prepare this for you, but it's a profit and loss by month. So we're going to take all of the actuals. This video is being recorded in October, so we want to take all of the financial information that's complete up to the last month, so September 30th, and this imaginary company is done. So the financials are done, so we're going to pull the information through September 30th, and then we're going to display the columns by months. And we're going to run it on a cash basis because that's the period that we have. And we are going to run report. Unfortunately, the sample company doesn't actually give us great data for historicals. So what I've done is basically taken a real company, changed a bunch of the financial information, changed a bunch of the accounting information, account information, and then I'm going to use that to show you actually how to build a budget, because you can't really build a budget on blank and zeros. So again, feedback for QuickBooks. If you want to give us a sample company that actually has information in it for more than a year, that would be great. Thank you. Feedback. Okay. They only have a couple months worth of information, and it's really kind of lame because we're pretty limited on what we can do in the system. But that's how you pull a profit and loss by month. And then you're going to want to download it into Excel. So you can export that into Excel, and then you'll have an Excel file. Here, though, is our Excel file that we're going to use for this video, and I'm going to show you guys how to create a budget from scratch, okay? Now, if you watched our last video, you would know that I recommended having at least 12 months of financial data to look at, and then also maybe a balance sheet as well, and then your strategic plan, and any other inputs of some things that you would be thinking about going into the next year if you're going to be creating a budget. So with this, I'm assuming that I have all of that stuff for the purposes of this. I'm going to be making up some of this as I go along, but just assume that when we're making up something, it's rooted in some type of financial fact. Okay, so I'll try to point it out if I, make those assumptions. Pure Joy Marketing Agency. I used the name of this business in my last cash flow forecasting video. I thought I'd just run with that. But basically, this is a company. This is their P&L, so you can see that they have some different services, ways that they make income. That's this top portion. They have some cost of goods sold. And then they have payroll expenses, marketing and development, professional services, facilities. So what we want to do is we want to create a full budget for 2024 because we have 2023 actuals and we're in Q4 of 2023. So we want to create this budget for the next year. And with that, we've got some things we need to think about. Right now we have 9 months of actual expenses, and then we have 3 months of forecast. That's why these things are grayed out. This is the forecast, but we want to assume that this forecast that they've been tracking pretty closely, we're going to assume that this is a rolling forecast and that we've updated these numbers to be closer to what we really think we're going to receive and what we're really going to spend through the end of the year. So these should be fairly accurate. And so we're going to use all of that information. So when you get a profit and loss like this, the first thing that you're going to want to do if you're going to build a budget in Excel is you're going to want to just extend it out. And you can copy this over if you want to. I like to first extend it because then it's very easy to just reference left and right and say, okay, like what was that January number? Okay, what do we have over here? And what I do is I just run those formulas across. You can copy the formulas over. You can just enter in some new date ranges here. It's a few little Excel tips that I'm not going to get into at this point. Basically extend out your spreadsheet. So if you want to make it a separate tab, that's up to you. You can totally do that. Just for the purposes of this, I find this to be kind of easy. I like to also freeze the pane here. We're going to freeze this pane so that when we scroll over, we can still see our account numbers. So that's kind of our account names and our account numbers. We don't really care about the numbers right now. We just care about the account names so we can make sure we're budgeting properly. So when you create a budget, you are literally thinking you're going to be trying to predict what's going to happen in that account for that future period of time. So you might think, wow, how can I possibly guess what that account is going to be in the future? How do I know? I don't have a crystal ball, but we have lots of things that can give us indicators of what that number could potentially be. Okay, so we have things like historical expenses. We can look back and say, what did we spend in the past? We have information like, what is our current customer base? What are we currently selling? Do we have contracts that we could maybe look at and then kind of expect revenue? Or maybe we can look at trends. If our sales trends have been a certain way, maybe winter is always a slow season, summer is always a high season, and year over year we're growing about 10%. We can look at some of those trends and plan them into the budget, okay? So as much as, yes, it feels a little bit like guessing when you're putting together a budget, try to think about how could I anchor each line item in some kind of truth. And when I say truth, is there a contract that we can tie it back to? Is there, for example, I'm in a rental space right now. This is a rented office. I know what my lease is going to be every single month. I have a contract. I know what that expense is going to be. It's rooted in a truth of what I know I have to owe. And then I also pay for a co-working space. I know what that's going to be. Okay. So, that's the kind of thing we know to a good extent a lot of our expenses in our business. There's going to be the stuff that is a little bit harder to predict, maybe your office supplies, because maybe you go to Costco once a quarter and you stock up on stuff, or maybe somebody needs something and you buy it because it's really easy to get on Amazon. There's all the time little expenses that are going to be made that we can't necessarily perfectly plan for. But in those situations, we might want to just put together an average and say, hey, let's just across the year, let's not spend more than $10,000 on office supplies or something like that, So there's different things. You need to think about the lines in your budget and think about well, how can I get to some sort of realistic expectation of what this number would be? Okay. And it's way easier to do, I would say, most of the time on the expense side than it is on the revenue side. Revenue is harder to predict. So I just want to start there and let you know that if you're having a hard time with revenue, I would actually even suggest skipping over revenue, doing your expenses first, and then coming back to revenue after you've kind of gotten sort of the hang of the budgeting process, okay? So let's just get into it. I think it's good to just talk through line by line and you'll kind of see what I'm talking about here. Okay, so I don't know if we'll have time to cover the entire P&L. I don't want this video to be an hour long, but we're gonna go ahead and create our budget here. All right, so let's start out with retainer services. So in this situation, we might actually be able to predict our retainer services, maybe easier than a lot of you might be able to predict your revenue, because in this marketing business that we have, they have a certain number of clients and they're bringing in a number of clients at a certain time, at a certain cadence. And so they have a base of what they know to expect in revenue every single month from their retainer work. So what we're gonna do here is actually just build off of prior years numbers, and we're going to just add $2,500 every month. Oops, that's multiply. Let's make sure we do the right formulas. 2,500. Wow, it's not going so well. Okay, so adding 2,500 every single month. So that's just an assumption that I would talk about with the client and say, realistically, what are your goals for this next year? Do you have the capacity to take on that much work? Are you planning to hire? Is this doable? Is it not doable? And they, with all their marketing efforts and everything that they're doing, they say absolutely it's doable, and they believe that this is very realistic. So in this situation, we're just gonna have, I'm gonna put a note and I'm just gonna say like one new client per month. So we can just kind of go back and reference that later. And then project services, they do projects. If you look back at historical, they do about anywhere from nothing to about $15,000 in projects per month. This might be a little bit harder for them to budget for. So in this situation, I might look at the total year and say, okay, they did about $66,000 in project services last year. Maybe this year they want to grow that by 20%. If they want to grow that by 20%, that's about $80,000 a year. And if I divide that by 12, that's about $66.50 per year, per month. So I think what I'm going to do in this situation is just average it out so that they can see if they're on track for their total year goal. That might mean that they might get a project in January and then nothing in February, but then they get a project in March, but then maybe nothing for 2 months. So they need to think about, okay, how do we make sure that we reach our annual target of basically $80,000 for the total? So we're gonna say the note here is an increase over prior year of 20%. And where the projects fall, we're not going to be worried too much too much about that. We're just overall worried about, like, are we reaching the annual goal? Okay, because projects can come and they could be very extensive, or they could be kind of small. Okay, so then so going into income from direct printing costs, we're gonna just actually not budget for this because that was a one-off project. I'm using my imaginary history of this business. That was a one-off project, and we're not going to budget for it in 2024. Referral income and affiliate sales, they have some digital affiliate sales as a marketing company that they make, but it's really hard to predict. So what they would like to do is actually just understand, like, what did they make on average last year? And they made about 840. They're not trying to push that really extensively this coming year. So what they're planning to do is just say, hey, we don't think this is going to grow. Let's just be conservative and say, let's just make the same amount that we made last year. And with budgeting, with income especially, you don't want to put any super aggressive growth goals in here. You want to be conservative of realistically what you think you can hit. So we're going to just make a note, average of last year. Okay. And then with direct media income, this is another one that they don't know exactly when it's going to come in, but basically the expense goes out around the same time. So we just need to make sure that we have the timing correct. You can see that down here in cost of goods sold. So what we're going to do there is just also take kind of an average last year, plus I think we should take a growth percentage as well of that 20%, like we're growing in projects as well. Okay, so about 20,000 per month. So we're actually just going to put in 20,000 per month. All this needs to be kind of based in something that we think is realistic. But when we put higher, like, this is direct media income. So this would be if the company buys Facebook ads or something for a client, and then that client reimburses them for the Facebook ads. So it's kind of a flow through cost, but they do make about a 15% margin on it. We're just putting in a number, and that will also increase the expenses along with it. So something to make sure that you have that built into the budget if you're going to be increasing something something that correlates to a different line in the item, or different line item in the budget. I can show you that in just a second. So we're going to say increase over prior year 20%. And then, so we've gotten basically all of income now budgeted. So what are we looking at here? We're looking at let's see, about a 290, and then 290,000, that's a 28% increase. Okay, so that's a pretty aggressive growth goal. So growing 28% probably means that they're going to need to increase payroll, and we'll leave this here as we're building the budget and then decide, is this too aggressive? Do we need to pull back a little bit? Maybe we don't want to be hiring that many people to reach that goal. Maybe this is just 1 or 2 key people that could help us reach that goal. So, okay, let's go, and hopefully that kind of helps you think. Like, the point of this video is really to help you think through how to think about these different line items on the budget and to use the information that you have available to think strategically about the future of these expenses. And sometimes it just takes a little bit of work, but then you can totally make it happen. And yeah, you guys got this. So right here with the direct media spend, I have a formula worked in here that basically says that we want it to be based off of this direct media income, that the spend is upcharged 15%. So if you take this 17,391 and you multiply it times 115%, you'll get the 200 or the 20,000. So if I take this times 1.15, I get 20,000. So I've just kind of backed into this number to give you guys an idea of what the cost of goods sold would be on this. So we're going to see this is, so actually you would probably in real life, you would probably estimate your spend based on what you would estimate the spend line item first. And then based on what your contracts are with these potential clients, like, and what you average spend on media for them, and then you would upcharge from there and back into this number and get this number, calculate that number. So I kind of did it the opposite way, just because I don't have real contracts that I can estimate the revenue off of, okay, and the digital media spend. Okay, so we're not going to put anything for COGS printing either, since that was kind of a one-off. Obviously, if we're printing stuff, we want to make sure that we get our expenses covered. So I think those 2 things will probably wash. On average, in the past for merchant service fees, this is a good time to take an average from the past and then use dependent calculation. So what I mean by that is to say, okay, how much in the past we took in 15,665 or we spent on merchant services, and of revenue, what was that number? So it was 0.15%, okay? So because of that, we want to estimate that same percentage going forward. So we want to say 0.15 times total income to give us a number. So that way, if we change our revenue number, we change our revenue projection, we're still going to be about spot on our merchant service fees, because we know on average we have some people that pay with cash, some people that pay with credit card, and so it kind of blends out to be about 1.5%. That's why I say it's kind of dependent on the other one, but we did take an average to see, what's our percentage we've been paying in the past, and then we project that forward. Labor for subcontractors, these are kind of few and far between because we actually have an employee-focused model, but we can plan for some subcontractor labor. With this, I would probably look at, okay, we know we're going to use some subcontractors during the year, so probably just looking at having an annual target or an annual budget, and then just spreading it out across the year. So maybe it's something like $800 a month, about $10,000 a year, okay? Because last year they only spent $3,000, but they're anticipating with their growth, they might need a little bit more subcontractors. And maybe that's not high enough, but again, for the purposes of this example, that's kind of how you might think about it. Like subcontractors, you're gonna need them and you're not gonna need them. If you had this budget like planned based on like exact projects and you knew like this one's really going to need heavy subcontractors, you should go to that month and make sure you have higher expenses and your subcontractors for that month. So it kind of depends on how detailed you're getting into your revenue projection. And that's really the best way to do it. If you have that level of detail and you can project out, to actually put like the, increased labor costs in there as well would be fantastic. That's what we like to see. Okay, so we are going now into payroll expenses, and I'm going to go a little bit fast through payroll expenses just because I think the team will probably stay pretty similar as to what it was. If we look at November, that was pretty steady to what normal payroll looks like. And then in December, they did give a bonus, so that's why payroll is higher. So I don't want to plan my budget based on December, even though that's the most previous month, because then payroll will be over projected for the whole year. So you want to think about if I'm projecting payroll, let's project it based on more recent information that is like indicative of what the future months are going to look like. So November would be a really good example of that. And we're going to say that for the first, 3 months of the year, that they don't need to make any staffing changes. So I think what I'm going to do here, one of the things I really love about using Giraffe when we use it for our clients is that they have a whole staffing model built in. So for new hires, you can actually type in like, we're going to hire somebody at $65,000 a year, give them a title like to be hired, and then it will put it into the financial forecast based on the date that you said you're going to hire them. So we don't have that level of complexity here in Excel, but we can just kind of add in some additional payroll costs. Let's say that in salaries and wages that we think we're going to add somebody who's going to be an extra $5,000 a month. And you guys can see like my payroll tax, I actually already put it in here that it's a calculation based on salaries and wages. So you can see that the number moved when I increased the wages. And let's say by August, we actually need to hire again, but this is going to be a more senior person. So adding another $10,000 per month. And then, okay, so we have increased payroll costs. And then that also went up. I would also probably make healthcare. So salaries and wages, we want to base this on actuals plus planned hiring. And then payroll tax expenses, average percentage of salary. And then 401k contribution, this should also be a percentage of payroll if you have that. But in this situation, I don't have that in here, so let's clean that up. All right, let's see about 3%, which makes sense based on the company match that we have. So we're gonna make that also a dynamic number so that if we change our payroll number, it will also change payroll taxes and it will change company contribution. Healthcare contribution, this you would want to say, how much healthcare are we providing per individual or per employee? And you would want to do this probably like cost per employee and project it out like that. I'm not actually going to change this number right now. And then employee benefits. So this would also probably be a cost per employee. So I would actually do kind of maybe have a separate sheet or something for some of these salary and wages expenses so that you could say, okay, maybe healthcare contribution is $300 per employee and we have 10 employees. So then it's $3,000. Or other employee benefits might be something like, additional life insurance or like some of the smaller insurances that you can potentially offer. And then what it's going to be, the cost of it times the number of employees, and you can plug that number in here. Okay, so look for like actuals here if you're going to be budgeting for that. And then things like bank service charges, we don't always know when these are going to pop up. Sometimes we do, like this one, for example, is like a credit card fee, an annual credit card fee, and it's just been coded to the bank service charges. So if that's the case, you actually want to think about the timing of when it was in the past and projecting that out to the future. So in this case, I'm actually just going to plan for it in February. Actual expenses in a certain month. And then I don't want to plan for any bank service charges fees because I don't think that we should be having any of them. And I want that to pop out if we do a budget versus actual and we are paying bank fees, and we shouldn't be because we should have free checking and all of that stuff. Okay, so when you get into other expenses like marketing and development, this is when you want to think about, this is where some of the strategy, has strategy changed from prior year to current year. Think about what you have planned this next year. Do you want to go to any conferences? Are you going to be engaging any marketing professionals? Are you going to be investing in advertising? Are you going to be building out a new website, for example? Like, there are lots of things. Marketing can be a lot. And some people might want to do like where you just do a budget on the total to say, okay, for marketing and development this year, we just want to spend, let's stay under $30,000 all in, because last year you spent 26 and you're going to give it a little bit more this year. So that is an option. I like to, if you have the ability and you are going to be doing some of the same things you were doing last year, to actually go line by line and say, yes, I'm going to keep that expense, or no, I'm not going to do that. For example, like if there's conferences you're always going to go to, make sure that those costs are planned in. If there's, software subscriptions for marketing that you always have, like plan for those. These are the kind of things that it helps you get more granular and know, hey, are we going to be way over budget, or are we going to be okay? If you kind of can actually break it down into the detail of like what makes up that 30,000, for example, like you can decide. So in this case, we're going to take like actuals of what we did last year, Excel, actuals from last year, actuals, and then we're going to do based on the strategic plan for business development. So based on the strategic plan, there is a conference in March that they want to go to, but just the CEO. And then in August, there is a conference that the whole team can go to. And so we're going to put a higher expense there. And then this line item is just a software subscription that they're going to use every single year. You might want to even like build in a slight increase in pricing over last year. Marketing services, this is something that was engaged in halfway through the year, and so they're going to keep that. A marketing consultant, they're going to keep that. They're going to plan to keep it throughout the whole year. And then they just have like a basic website maintenance here. Now, maybe they have some web pages that they are planning to update, and so they know that they want to do that project in Q2 of 2024. In that situation, they might go ahead and put in a little bit of extra money, so maybe just $1,000 extra for two months in May and June. And then professional development as well. This would be like the CEO's conferences or things that they're doing, coaching, things like that. There's not really any big plan this year for professional development, so I'm actually going to leave that out of this budget. So then we can look at this and we can say, okay, like they actually have planned $33,000. It's over that $30,000 that we were thinking might be enough. So this is one reason why we do want to look at this and say, hey, like, is this a realistic budget for the year? And, we can get to the end of the profit and loss projection here down at the bottom and decide, do we need to cut some marketing expenses, or do we need to make some more money, or do we need to cut expenses somewhere else, or are we profitable enough? Okay, so professional services, I'm gonna say one thing that this business has not been doing is they have been doing all their own bookkeeping, and that's something that they have been encouraged to outsource. They are going to actually change, this is part of the strategic plan, is to hire a bookkeeper and probably some outsource with them growing the way that they are, some outsourced CFO work. So they're going to, they're going to start having some accounting fees. And then not a lot of legal is being planned for the next year. So, but they will have probably just some contracts that need to be reviewed every now and then. So I think we just need an annual budget here. And with this, we can just put in, I think $100 a month could make sense. Now, sometimes when you have an annual budget, I will put it in quarterly. So if the annual budget is $1,200, you might do 300, 300, 300, 300. It's all kind of up to you and what you prefer. I mean, if you're looking at, I like to look at a year-to-date budget to actual as well as a month-to-date. And so when you look at the year-to-date, you can see, if your spending has been off of the plan, but it's catching up to the budget. You can see that in the year-to-date report. Okay, licenses and permits. This is something that, like, you have a business license that you need to renew or a city permit that you need. So likely what we do is we just say, when did we pay that last year? We're probably going to pay it in the same period this year. So we can literally just like copy these from January and April and move them forward. Now, sometimes fees go up, not usually by very much. If they're like city fees, you can budget a couple extra dollars if you want to. Actuals from prior year. Now, one thing that you want to think about is, are you doing anything different this year? Are there going to be new licenses and fees that you might be incurring? So that's something to think about with your strategic plan, and if you need to be budgeting some extra expenses. If you open a new location or something like that, you need to factor that in. We're going to get into facilities costs. So with facilities, we're going to again look at what is our actuals from prior month, because that is what we anticipate going forward. So, and then repairs, we'll do kind of like an annual budget for, because we don't know exactly when those expenses are going to hit. Cell phone, we know what that is going to be. Actually, it's reducing costs because there's a line that's not being used. So we'll reduce that cost. And then internet should be the same from prior month. And then insurance is an annual expense, and it's always increasing. Even though things aren't happening, insurance always increases. Okay, so we're gonna take actuals across the entire year. They don't have any plans for additional space, so that's just the budget throughout the year. With repairs, they don't do a lot of repairs, so we just wanna give them a little bit of a budget every month. 50 is probably even too much, but we're gonna just do that. They spent $300 last year, so that's about double. Cell phone is gonna go down to $150 per month with that extra line removed. And then same, the internet should be about the same, so $278. I'm just gonna round it up, and we drag and drop that. Not really drag and drop, but we pull the number over using our little Excel here. And then insurance. Okay, so insurance is always paid in April of every year. And what we're probably gonna do is increase it by about 10%. So I'm actually just going to take that number and multiply it times 1.1, which gives us a 10% increase. And I'm gonna just make a note, annual expense plus 10% over prior year. Okay, and these little notes are just mostly for me so we can remember what we're doing here. And then, let's see, let's go into office supplies. So office supplies, this is gonna be one of those sections that's gonna have a lot of expenses sort of all over. So you might want to do things for like office supplies or office equipment. You might want to just have kind of a flat budget for all of those together. But in this situation, we've got software lumped into office supplies, and we want to get a good average for our software expense. And then also we have some gifts that we did last year that are going to be actually accelerated in 2023. So there'll be a slightly different timing. And then let's see, what do we do here? Postage and delivery is like a little bit few and far between. Office supplies, we just kind of need to have sort of a average across the year. And then office equipment is really just when we hire somebody new, we need to buy them a new laptop. So we can put in an estimate for that here. So based on when we were hiring, well, let's do postage first. Maybe postage is just like $10 a month. And then office supplies, let's see what we did on average. So it was about $100 a month last year. I feel fine with like average. Let's do $120 a month, since we're gonna have a few more employees this year. And then office equipment is really those laptop purchases. So remember that we were hiring up here on our payroll expense. We hired in April and then we hired again in August. So with that, I want to put, and we spent about $2,000 on a laptop. Maybe the more senior person might have a slightly nicer laptop, so it's going to be $2,500. And so actual hiring, timing. And then dues and subscriptions, we're going to just take an average of what we did over prior year. Dues and subscriptions might be something you could look at and say, okay, maybe there's some things that renew at a very specific time. Like you can see there's obviously a subscription here for 27, 27, 27, and then maybe some annual subscriptions as well. So if you want to get into some nitty gritty there, you can. For the purposes of this video, I'm just going to average it over the year. And then gifts. So we did gifts, client gifts last year in January. We're actually going to do December gifts this year, and then probably do something at the end of the year, maybe pay for everything in November. We have more clients, so we're going to increase the cost there. And that's just kind of a one-time, for client gifts. That's for client gifts. And then we like to have budget just for other, employee gifts, little things here and there. Maybe somebody we send flowers, or we buy books or things for people. That happens sometimes. We're going to give an overall budget of $4,000. Now that is less than last year, so you might want to look and say, what is our gifting strategy for this year? Is this enough? Do we want to be doing more gifts than we did last year? Or was last year maybe like there were some extenuating circumstances where there was additional gifts? You can decide if that makes sense or not. And then we go into software. So this is another one where we'd be looking at, okay, what's our average software costs? We probably want to take almost everything we did last year and basically increase it based on headcount probably. So software, you could get into much more detail and try to look at it. But I would wonder if it makes sense to actually just take exact costs from last year and increase them slightly. It's probably not the best way to do it, but if I take all of software and I just copy it over, because you've got monthly renewals and then you have new software that you might have. I actually don't want to do that because we did have probably new software, because it looks like this average is higher than the beginning of the year. Beginning of the year was lower. So I probably would take more recent monthly expenses and plan for that. And then I know that there's always higher annual renewals. So, and again, you guys, you can get into some detail to try to really get your software budget down. Like if you have an IT person in your team who keeps track of all your software licenses, they should be able to put together a software budget for you. And then you get to just put the numbers into your budget, or just do a review of all your software subscriptions and say okay, what are we going to continue paying for your, month over month, and then you can get a more accurate number to put in here. But I would base this on actuals with some growth for new hiring. Okay, now travel, this is one that I oftentimes will skip over the breakdown between meals, airfare, hotel, because it doesn't really matter that much. But I can kind of put in a lump sum of a budget when I know we're going to be traveling somewhere. So for example, up here, there was a business development conference in March, and then there was one in August. So let's say that the March one was actually an away travel, and we're going to put $5,000 in. But then maybe the one in August is just in driving distance for everybody, so nobody has to stay in a hotel or anything like that, but you are going to have a little bit of mileage reimbursement for potentially. We could put in $500 for that. And then maybe there's some other trips that need to be, maybe the CEO is taking some trips for business development or other things that aren't related to a conference. So maybe just we can add in a little bit more budget for travel here and there, based on what you think is going to happen. So I think travel it makes more sense to do it on a on a total line for me. Another reason why we like to have the chart of accounts separated by these categories so that we can create a budget based on the total category rather than having like hotels up here and airfare down there. Okay, so let's see here. Let's see where we're at as far as our profit margins. Not looking great. It's not looking good, you guys. Oof, 7%. Okay, so this is where you have to decide, maybe something has to change. Last year's profit margin is 18.2%, so we have a target profit margin of 20%. But if you want to improve the profit margin, just real quick, you can reduce expenses or you can increase revenue. So if this has been helpful and you feel like you've learned something about budgeting today, please tell me in the comment section below what you've learned. I would love to know. And then if you know any other business owners who also could use a budgeting tutorial, please share this with them, because this is not a lot of people are breaking down how to create a budget from scratch on the internet. So I hope that this is helpful to you. And please let me know if you have any questions or comments. And if this video was helpful, I would also really appreciate a thumbs up. All right, thank you so much. Happy budgeting.